Heya Cryptozens, tonight's show. BlockFi offering employee buyouts, Russia's asset-backed stablecoin, and Paraguay closer to crypto framework. It's 10 p.m. Pacific time, and the date is July 18th, 2022. Welcome back to the Crypto Overnighter. My name is Nicodemus, and I'll be your host. The cover model, mascot, and co-host for this podcast is Tex, and together we take a nightly look at the crypto, NFT, and metaverse space and the industry that surrounds it. So take a minute, go ahead and subscribe to the podcast now, because we're here at 10 p.m. every night so that when you leave in the morning, you're taking with you the crypto news analysis that you need to start your day. And keep in mind, nothing in this show should ever be considered financial advice. Now, if you'll remember, recently we covered BlockFi's CEO Zach Prince and his request that we don't compare BlockFi to companies like Three Arrows Capital and Voyager. Now, it was only a few weeks ago that they finalized a deal with FTX, and that deal was a bailout in the form of a $400 million loan, in addition to laying out potential acquisition terms. And remember, it was only a month ago that BlockFi announced that they were cutting 20% of their staff. Now, at the time, they joined the likes of Gemini, Coinbase, and Crypto.com in laying folks off. They said it was due to being, quote, impacted by the dramatic shift in macroeconomic conditions worldwide. At the time, Prince tweeted out to his followers, quote, all products and services continue to operate normally. That said, he did have some bad news. He continued by saying, we are reducing our headcount by roughly 20%, and the reduction impacts every team at the company. This decision was driven by market conditions that have had a negative effect on our growth rate and a rigorous review of our strategic priorities. We are doing everything in our power to treat all of our impacted colleagues with the empathy and compassion that they deserve. Unfortunately, it seems that 20% was not enough, because reportedly BlockFi is offering 10 weeks paid leave voluntarily. Along with those 10 weeks of paid leave is 10 weeks of health insurance in the form of COBRA. And also, anybody who takes the buyout will still be eligible for unemployment insurance, which means that this is very expensive. There is a lot of money going into this with no expectation of any work done in return. Now, if you remember, it was just last week that reported Prince didn't like the comparison. He didn't want BlockFi to be mentioned in the same context as a Voyager or a Celsius. He pointed out that they raised interest rates, and that's true. Right after the FTX bailout, BlockFi announced an increase in their interest rates, and I took that as a sign for a little bit of hope. He also said that they have, quote, exciting stuff in the pipeline. That was in response to Pantera Capital's CEO, Dan Morehead. Now, Morehead said he was unhappy that DeFi got lumped in with centralized finance in the terms of crypto winter. And in doing so, they lumped BlockFi in with Voyager and Celsius, to which Prince responded, they were or are bankrupt or insolvent. We are not. I'm sure there are hundreds or thousands of depositors who hope that BlockFi stays that way. Folks, we are back over $1 trillion. That's right. At the time of writing, the global crypto market cap is $1.02 trillion. It's up 6.09% in 24. The top 5 cryptos by market cap are Bitcoin up 5.44%, Ethereum up 12.83%, Tether, USDC, and Binance Coin up 3.33%. Russia has a new financial instrument, and surprisingly, it's not a digital ruble in the form of a CDBC. It's not a stablecoin issued against the ruble. They're calling it a digital financial asset. And that's right. Atomize is a tokenization platform. It's backed by a Russian oligarch, Vladimir Putanin. Now, Putanin is a co-founder of Interos, and Interos is a Russian conglomerate and investment firm. Interos is also the backer of both Atomize and Rosbank. Now, Rosbank comes in because they're a local bank, and they announced that they are the first partner with Atomize. They're a backer in Atomize's plan to offer digital assets backed by Palladium. And so it came to pass that Atomize issued their first digital asset. They're Russia's first legal digital asset manager, having obtained registration back in February. So this isn't really a new idea, by the way. Nornickel is a Russian mining company, and they had a plan to tokenize palladium back in 2019. And while that plan was dumped back in the day, it's not hard to see why it's resurfacing. Western sanctions against Russia have made things more difficult for them financially. They've also been cut off from SWIFT. Not only is Russia under sanctions, but anyone who deals with Russia also risks sanctioning. Now, I'm sure that this is expected to help ease the financial stress that those sanctions are causing. It's just going to be a question of how, because honestly, I'm not certain that it's going to work. Interos' official Telegram account announced that the first issue was GPF Investments. Now, GPF Investments is the Russian division of the Global Palladium Fund. And they go on to talk about what palladium is. I'm not going to go into all of that. It's a very expensive precious metal. If you need more, Google it. Now, this token is set up to allow the bearer to make a monetary claim for the equivalent of the market value of palladium. So you don't get your hands on the actual palladium reserves, just a monetary representation of their value. And then they went on to say that Atomize is going to be an important part of the Interos ecosystem, along with Rosbank, Reksoft, and Tinkoff Bank. Potanin, for his part, is confident. So confident, he's certain his Atomize issued tokens will take crypto's place in the economic space. He said, quote, unlike cryptocurrencies, industrial and other tokens are backed by physical assets, and the use of blockchain technology makes their transactions reliable, convenient, and transparent. The token will defeat the cryptocurrency, pushing it to the sidelines of the digital economy. Now, this is interesting, right? Because I have to wonder what Russia's central bank thinks of all this. Because remember, it was last week that an unnamed representation of the bank dismissed the idea of Russia-backed stablecoins. Now, the Ministry of Finance, different story. They're okay with stablecoins as long as they're backed by something. Ivan Chebeskov is the ministry's Director of Financial Policy Department. Now, he supports stablecoins tied to, quote, the ruble, gold, oil, or grain. He said it was, quote, the right path for developing new technology. So he is totally supporting private companies to work on this. However, the Central Bank of Russia is still only interested in a central bank digital currency, which sucks if you believe in financial privacy. As far as the central bank is concerned, they rightly point out that the ruble is the only legal payment method in the country, and they're supporting the digital ruble as, quote, combining all the advantages of digital payments and the reliability of national currency. A CDBC in the form of a digital ruble would provide the Bank of Russia total control over people's finances, as well as total insight as far as where their money goes and what their spending habits are. I can't imagine a central bank passing that degree of control up. Now keep in mind, just because the token has been issued doesn't make it legal tender. So there's no advantage there. They aren't breaking any new ground in that department. Russia is still under sanction, as is Potanin personally, so it's not like Westerns can go buy a bunch of palladium tokens from a Russian bank owned by a sanctioned Russian oligarch, so no advantage there. Now, if the Russians allow this to be used internally as a stablecoin with all the natural advantages that a stablecoin brings, that would be a different story. But right now, it's just a curiosity. The global NFT market cap is up 15.97%. Sales volume is down 1.96% in 24 hours. According to CoinMarketCap, the top 5 NFT collections by sales volume are CryptoPunks, followed by Otherdeed, Bored Apes, CloneX, and Mutant Apes. Now keep in mind, some of these collections have very volatile prices, so do your own research. The Paraguayan Senate passed a bill on Thursday, and that bill establishes a regulatory framework as well as a tax structure for businesses in the crypto space and crypto miners. And this bill has been in the works for about a year now. Senator Fernando Silva Facetti introduced the bill, and it sat in the Paraguayan Congress until last May. So last May, the bill passed Congress, and then it's gone back and forth. The Chamber of Senators approved it in December, but then the lower house had changes, so then the lower house passed it again last July. This bill calls for a new ministry, And this agency, the Ministry of Industry and Commerce, would be charged with overseeing crypto service providers. And now, its fate is in the hands of President Mario Benitez. A notice released last May kinda outlines the bill. It says, the purpose of the proposal is to regulate the activities of mining, commercialization, intermediation, exchange, transfer, custody, and or administration of crypto assets or instruments that allow control over crypto assets. And the bill lays out it would, quote, aims to guarantee legal, financial, and fiscal security in the businesses derived from its generation and commercialization. Now, local media reports state that companies operating in the crypto arena would be treated the same as those dealing with securities, for tax purposes anyway. So that means they get an exemption from paying the value-added tax, but they will still have to pay income tax. So let's take count here. We've got Latin America's countries moving forward in terms of crypto adoption and regulation. We've got Brazil, Argentina, and Panama. They're working on their own crypto frameworks. And then El Salvador, of course, was the first to adopt any cryptocurrency as legal tender. Now, one of the things that they're concerned about, and in fact, one of the things that may stop the president from signing this bill, is the question of energy consumption. Because this bill assigns the National Electricity Administration as being responsible for maintaining the energy supply. Paraguay has 2 dams that provide 80% of the country's electricity requirements. In fact, they sell energy. That said, demand for energy has doubled since 2010, while generation of energy is on the decline. So, while this is an advantage for miners, this legislation doubles down by giving the mining industry access to the excess electricity produced by dams. And that's going to do it for us tonight. I want to thank you, my listeners, because when you stop listening, I'll stop talking. You stay safe out there. Watch out for yourselves, but watch out for each other too. We'll see you tomorrow night.